Meow Cantonese cat here. There have been a lot of requests about Chinese stocks and how the Hang Seng is doing, how Alibaba is doing. I'm going to spend some time to show you some of the charts and show you my thoughts. In general, I haven't really been that bullish on it. I used to have a position in CWEB, which is a double average, KWEB, which is the China Internet ETF. I exited out of that about a few months ago when I really started to see that the trend is not favorable. I do want to show you quite a few things as to why I feel that way. Now, this doesn't have anything to do with politics. I'm generally like to kind of shy away from that. I'm just more here trying to show you some of the objective data and what I think, what I see, whether or not the risk-reward ratio is worth it. And I will let you decide after you look at the data that I present to you. This is the Hang Seng Index, or in Cantonese we call it Hang Seng Ji Shou. It's just been a pretty vicious downtrend, right? Like you look at this. The first thing I look at is I try to look at a monthly moving average and I try to find out the greater trend. And one good way to usually look at it is the 20-month simple moving average. In order for you to get some kind of confirmation that there might be a trend change, I at least like to see some kind of deceleration of the 20-month moving average, and to give me at least a chance to say, hey, it looks like it could be starting to kind of roll over. It's starting to form a nice bottom here. There have been instances where you could potentially have continued deceleration of the greater trend of the 20-month simple moving average. The only problem with that is that when you have deceleration here, the price is still kind of close to it, so you're still going to potentially have some kind of ability to repair the chart. Whereas here, it's just so far away from it. I think that even there's a potential for this to start trying to form a bottom, as maybe a couple of green candles here, which there are no guarantees. The 20-month simple moving average can still continue to push down. It might start to crawl over, but it's still going to be a downward sloping 20-month moving average, and it could end up hitting a lot of resistance above, and it could keep going down. Right? This is going to be a pretty painful 2024, I would imagine. Let's say even if there's a chance for it to kind of break above, it probably still most likely need to do a back test. But there's always, when you see a pretty strong downward trending 20-month simple moving average, there's always a chance where price could have some kind of mean reversion push up, meet resistance right there. There's a potential for it to form another leg down, right? And it could potentially form a low. There's no guarantee when it comes to a pretty vicious downward trending chart like this. Initially, when I was trying to touch here and trying to touch here, I was thinking that there could be a deceleration of the 20-month moving average, right? But as I see that as price continue to get further down and drag the 20-month moving average, and I'm really very, very skeptical about this chart right here. If you look at the previous behavior, the trend change does kind of tell you something, right? Like it starts to curl over, okay, something bad could be happening, right? If it starts to slow down right here, okay, something good could potentially be happening, right? But so far, there's just absolutely no confirmation. We know that China's probably suffering from economic depression right now, based on all the data that we have, and we know that they're going to try to do their best to pump liquidity into their system and trying to get themselves out of this economic recession or depression, however you call it. There is, strong unemployment amongst the youth. There are economic problems there, and it seemed that there's still deleveraging going on, especially in the housing and banking sectors. I would imagine that the tech sector may be a little bit more protected, but if you're going to have an overall index downtrending, it does ring into some warning signs here. There could be increased liquidity in China, but there's also a possibility that the liquidity is just probably going to flow out of China, right? There's no guarantee that even if they decide to pump liquidity into the system, that the money's going to end up staying there, right? One way to kind of look at that is to look at the ETFs that are available to outside of China if we're focused at one exposure, right? And one way to look at that is to look at the volume to see what the big money has been doing. As you can see, there's a big acceleration of selling right here, and this is capitulation number one, right? And usually after capitulation number one, they might start to have some people come in and start, really start to buy up the vicious downtrend, trying to time a bottom. But of course, there's no guarantee because of how vicious this has been. And sure enough, it made another lower leg down on decreasing selling volume this time, which gives it a chance to really start to form a bottom right there, right? Over here seems to have a little bit of increase in buying pressure. Over here seems to have a little bit of decrease in selling pressure, a little bit of decrease in selling pressure. So over here seems to be some bottoming behavior, but the biggest problem is that if you look at over the last couple of months, and I was really starting to pick this up right around here, you really start to see an acceleration of selling. Like the volume is starting to pick up again. This is not reassuring. And right now, this is February. February is almost ending. It does kind of have a little bit of green candle right here. It has a hard time breaking above, the previous opening of the previous candle here in January. And it's also on decreasing volume with the buying pressure. And the 20-month the 20-month simple moving average is curling down. There's a re-acceleration of this downtrend, right? A little bit concerning. It does have this kind of, Adam and potentially an Adam and Eve kind of look, but there's no guarantee because of the increased volume. It's just not a good look. If you're wondering about how China market correlates with the US market, I've looked at this before. I'm going to try to show you what I think here. I'm going to make this to a line, and then in addition to just showing China, I'm going to compare that to the S&P 500 of the US, right? And I'm going to tick off the volume just to give you a clearer picture. There's a clear divergence where the US, as labeled by the orange right here, can keep going up and China can still keep going down, right? So the question here is this, right? What if the US goes down? Will China go down, right? Are there any instances where the US stock market goes down and China goes up? If you look at here, the US market is starting to go down here, right? The China market kept on going pretty vicious down even further. Here, when we have a leg down here on the US market, China keep on making another leg down, right? And if you look over here at the COVID area, US down, China down, although not as vicious. But it's still going to be correlated. If the US market goes down, the China market is probably still going to go down. Same here, right? Down and down. And I have yet to really see an instance where the US market goes down and the China market goes up. Now, opposite of that is this, right? If the China market goes up, is there a chance for the US market to go down? Again, I'm going to ask this a question. If the China market goes up, is there a chance for the US market to go down? I really have a hard time finding any periods where that's the case, right? Like, for example, if China market here in blue goes up, the US market tends to continue to go up, right? I mean, I really have a hard time finding any points where the Chinese market goes up and the US market doesn't go up. Maybe the exception of a very brief period right here, right? And then another area where the China market goes up, US goes up, China market goes up, US goes up, China market goes up, US goes up, right? China market goes up, US goes up. There has yet to be really any instance that I can find where China market goes up and the US market goes down. If you're going to bet on the Chinese market being okay, you might as well just stay in the US market. I have came to that conclusion and I have positioned myself accordingly. There are going to be periods where the Chinese market is going to outperform the US, no doubt, right? There's going to be a period that's like that in the past. I don't know whether or not it's going to happen anytime soon. The technicals currently are not supporting that within the next few months, and those are facts. It's just not supportive, right? Although I'm not going to be able to predict the future, but the trend right now is just not favorable, right? It's just not favorable. Now, another thing to look at is, okay, so you're talking about banking sector not doing well in China. You're talking about, the housing market not doing well in China. What about not so much those? What about tech, right? I mean, there's a new AI narrative coming. There's going to be a lot of potential competition, right? Where's the competition going to come from, against the U.S.? China's probably going to be really the only place where they have some kind of technology, some kind of AI technology that, the US is going to be worried about in terms of competition, right? So let's look at the internet sector here with the K-Web ETF. You are also seeing a very concerning trend here where the 20-month moving average is starting to point down. Now, it's starting to get a little bit closer to the 20-month moving average. So this right here compared to the Hang Seng, it may be less vicious and certainly seems to be the case, but I still cannot argue against this re-acceleration of the downtrend here. Initially when I see kind of flatten out, I thought, hey, there's a good chance it could be going up, right? But over the last couple of months, as I start seeing kind of trending down, that really does get me a little bit more concerned about it. And I exited all China positions because of this. Same thing if you look at the volume. Initially, there have been some promise, right? This vicious downtrend has been shown with very much increased volume here, and that's capitulation number one. There's been a little bit of slight decrease in selling pressure, and this is capitulation number two, right? Increased selling pressure right here. Since there has been increasing buying pressure, you can see there's like a little bit increased buying pressure, a little slightly decreased buying pressure here. Pretty decent buying volume pressure here, right up against the 20-month moving average. At that point, I really thought there was a chance, but you can see that as the trend continue to accelerate to the downside, there's increased selling volume right here. So something is happening here with the technicals that make me a little bit uncomfortable to end up staying here. So again, just something to think about. It does look like it could potentially be forming a little bit of like an Adam and Eve kind of thing, but again, because the increased volume here, there's no guarantee that there's going to be a bottoming process here, right? There's no guarantee, especially the acceleration of the downtrend. There's no guarantee. One of the major stock that have been talked about, Alibaba, is the prototype of the China internet AI narrative, right? Not good with the acceleration of the downtrend here. And when I was looking down here, it looks like it was just kind of getting a little bit further and further away from the 20-month moving average, and I decided not to stay, in the C-Web. I exited probably somewhere around here, right? Took a loss about 20-30%, but it just wasn't favorable. And I allocated that to, certain US equities, and I've found gains from that. So even though it was a loss, and it's easy to kind of hold on to your loss because you think that the risk reward ratio is much better. Sure, risk reward ratio is much better than here, right? There's no doubt about that. But you still have to think about what's best for you in terms of positioning. And this is also part of the reason I look at technicals, right? It helped me with thinking about investments, and it helped me think about long-term trends. There is an acceleration of selling here with the 20-month moving average curling downwards even more, and the selling volume has picked up. So this is a little bit concerning, right? There are a couple other I can't even think of that symbol because it's so weird of a symbol. But this is another major one. This is OTC, over the counter. But this is also another one that, it's just been a downtrend down here. It's basically stuck in a channel going down, right? This one doesn't look nearly as bad because it doesn't seem to have that curl down. It doesn't seem to have that re-acceleration downwards. But again, still there's no real data to show that there's going to necessarily be a trend change, right? And the selling volume over the last few months has picked up. So again, this is a little bit worrisome. One other one that had been very popular over the last few years, JD or Jingdong. I just made a post on this, and instead of showing you the words, I'm just going to kind of show you what I thought, right? There is a continued acceleration of this downtrend. Like, there's no sign that this downtrend is going to end anytime soon. Now, there is always a chance that the chart looks so ugly that it could have bottomed, right? But I don't know if I would want to bet on that because of the increased selling volume here and because of the acceleration of this downtrend. Sometimes having an acceleration of downtrend is okay, right? For example, if you look over here in 2019, there's an acceleration of a downtrend here. And that might not be so bad, right? Because price is kind of closer. There's a chance for the chart to kind of repair itself. And the selling volume has also decreased significantly, and buying volume has also seemed to have increased significantly, right? So it really gave it a chance for this to repair. It wouldn't be a bad thing to, be a little bit more contrarian to considering entering here based on the technicals, because of the context of this deceleration that could potentially be reversed. But here, the price is nowhere near the 20-month moving average. It's just down, and the selling volume just continued to pick up. Buying volume seems to be going down. There's a lot of concern here on this chart. A couple other things too that a couple other stocks have been very popular, including NIO, which has been popularized by a lot of YouTube channels. Anyway, I'm not going to name any names or anything like that, but of course, when the trend went up, the popularity of this stuff has significantly went up. But as you can see, that there's a huge downtrend here. When I was looking at it around here, initially when I saw this, I actually thought that there was a chance for NIO to potentially just start kind of for informing a volume process, because it looks like it's trying to re-challenge this 20-month moving average here, right? So there's a chance for this to potentially change trend there, but it didn't end up happening, right? And when it got down to here, I really, around like this 8s or 7s or so, it does seem like it could potentially be forming a double bottom. It does seem like the downtrend could potentially be decelerating, right? I actually entered NIO right around here with a very small position. But as I was looking at more of this, continued deceleration, I think I exited NIO at around the same price. There was no loss that I took on this. I just didn't find it set up to be favorable the more I look at it, right? Even though the selling volume was going down, it really looked like there could be a chance here. But I started picking up this kind of descending triangle kind of look. You can look at my post back in, like October, November. I really started to be a little bit more concerned about this descending triangle look. And a lot of people looking at the descending triangle, but even traders, they're like, okay, so you're saying it's a descending triangle. There's a potential for it even be a good trade, right? I can potentially buy here and I could potentially push up there, and I can exit here. No big deal, right? And there are also a lot of long-term investors who decided to buy here because it could potentially be a bull bottom here, right? But because of this descending triangle look, I decided to not stay in this. I exited. And this descending triangle actually ended up working out where price kind of felt it through the floor here, unfortunately. This price, is not at a huge volume or anything like that, but I think the interest of the stock has just significantly decreased, and it doesn't take a whole lot of volume for it to kind of push it through the floor, and this is what's been kind of happening. That together with the EV narrative in the US just not there. So there's not going to be a whole lot of, inflow into China EV stocks, unfortunately, at this point. Now, at some point, there could be picked up a volume. At some point, there could be a bottoming process. I just don't see where it's going to be. And if the trend continues to go down, even if there's some kind of mean reversion, it's going to meet resistance, and there's still going to be a risk for it to potentially go down, make another leg down, right? There's just no guarantee here at this point. And this accelerated downtrend with price getting further and further away from the 20-month moving average is just not a favorable setup based on technicals, right? Another stock that is also very popular was XPEV, XPEV, right? Very similar thing. Like, it made a very, very impressive move up here back in July, right? But after that, it didn't follow through, and price tried to find support here on like a downtrending 20-month moving average, and obviously it tried to make a little bit of a curling up there, but ultimately it didn't end up happening, and there ended up having some increased volume in selling, and you end up coming back down here. Right now, the 20-month moving average is, going downward, and this downtrend is accelerating, so the risk reward may not be that good right now. it can end up go ahead and just continue to go down, even if it end up having mean reversion. There's a potential where you get rejected and make another leg down, right? Again, nothing's ever guaranteed. There could be some kind of reverse black swan events where the China market actually turned out to be okay, and the next thing you know, this big giant candle that goes up to make this decelerate and it makes it go up. But so far, trend is your friend, and right now, trend is your enemy if you're a bull. I probably won't look into this anytime soon, even though at some point, it did look interesting. Li Auto, one of the better charts for the China EV industry. It's starting to kind of form like an inside candle here this month, but inside candle typically mean that it could favor trend continuation. And right now, the primary trend is down, right? And the 20-month moving average is also curling down. So this is also not necessarily a favorable setup. At best, this is equivocal, right? It could go up, it could go down, but at best is equivocal. Looking at the context of the of the rest of the greater China market, and also at the rest of the EV stocks in China, is maybe favoring, less favorable. I'm just being objective here based on the technicals, right? Now, are there any Chinese stocks that actually look like it has pretty decent technicals? There is one right now that I see that seem to be doing well, and is PDD. PDD stands for Pinduoduo, not Pinduoduo. That made me cringe every time I hear somebody say that, but it stands for Pinduoduo, and it's actually got a bull trend right now. It's the parent company of Meow. Meow has been very, very popular internationally. There's actually a lot of people using Meow to buy very cheap products that get shipped within days. Mrs. Cat is a fan, right? So actually, the fundamental of Pinduoduo actually is not bad, with the exception that there is a greater China risk, with the exception that there is political risk, and the chart is still somewhat favorable. You can see that 20-month moving average is still going up, although you can argue that maybe the uptrend may be starting to a little bit decelerate, but who knows, right? Like, it doesn't necessarily mean anything bad, right? Over here it decelerated, but it kept going up. So it doesn't necessarily mean there's anything bad. It kind of broke out with this huge cup and handle type formation, and it kept going up, right? Broke through. It didn't even really try to retest back here. There is a possibility where it could do that, and there's a possibility it could retest the 20-month moving average, and there's a possibility the 20-month moving average can decelerate further, and it can have a trend change. I don't know, right? It got rejected up here at the volume shelf. But because the trend leans positive, and because this still kind of looked like a bull flag, there's a chance for it to break out of this volume shelf and keep going up. And this is pretty much the only China stock that I see out of many of them that actually still look like it has a good technical setup. It's been more than 20 minutes. This is how I think based on the technical analysis. I'm not going to comment any further about the politics or geopolitical risk and all that, but that's what I see objectively. I don't have any exposure to China stocks. It's been 25 minutes. Thank you for listening. Bye.